Hi, so I'm Rohen from Reinventure. And Reinventure is a venture capital fund based here in Sydney, where we focus primarily on fintech and adjacent sectors. And the reason for that is because our primary LP was Westpac. So we basically operate as their venture capital fund in the market, but we separate and independent from them to combine the best of CVC and VC. So what that means is that we have really strong alignment with our founders and a really long holding period, which is different to a lot of how other CVCs are set up. We deploy capital in Australia and New Zealand primarily, but in the last kind of year, we've also been doing things in India and Southeast Asia as well. So we've been going for about 6 years, majority of the time in ANZ. We have 3 funds under management, each one of them $50 million, so a total of $150 million of funds under management. And we write checks up to $6 million. So anything from seed up to Series C. And when we make an investment, we get pretty involved and our hands-on investors, etc. So what does it mean to be focused on fintech and adjacencies? We think about it in 4 different areas. So first of all is pure core fintech, things like lending and payments, all that lovely stuff. Second is what we talk about as adjacencies. So these are things that make up a financial services stack. Things like cybersecurity, identity, data and analytics. So things that you'll need to do the function of financial service organization. So those are pretty interesting to us as well. Third is this idea of embedding of financial services. So we see software applications and marketplaces as the kind of frontier of where financial services will be delivered. So a consumer or a company might be using an accounting software or a HR software for its primary purpose, but it becomes a really powerful distribution mechanism to give them the financial service products at that point, because you're in the workflow or you have really important data as a result of it. And the fourth area that we've done work in is in, or made investments in, is in the blockchain space. So that's quite a tumultuous area, but we do see long-term potential there and have made investments there in the past as well. So how do we provide value beyond just the capital? So first of all is in lean in through the Westpac relationship, right? And this comes in different forms. It could be just access to subject matter experts that know a lot about a certain space that you're building a business in, or it could be distribution, or it could be a direct investment from the bank as well. It comes in different flavors. Second is within our team itself, we have apart from partners, we have people that are dedicated to help our companies grow and build really impressive organizations. So for example, we have a head of talent. Our only role is to help our companies and founders find the best talent for their organizations, right? And build a really world-class team. We have people in our team that have strategy and financial modeling experience. So helping our founders that don't have that capability to write pitch decks or build models or look at expansion or acquisition opportunities. And finally is the network and community support that we provide. So it comes in 2 layers. So on the community side, we've invested a lot of time and energy in building up, founder days and Slack groups and other events to bring founders together and the broader portfolio community together. So what that means is they have each other to rely on and draw on from their experiences. And the other side of the network is we have really deep relationships through Australia and New Zealand with different businesses, with different investors, but also globally as well. We've got good relationships with investors. So as our companies grow, we can provide them introductions to do these larger rounds. To support during COVID specifically, we've done a couple of things which I think other investors might be interested in as well. First of all, where it makes sense, providing capital. We've shored up some of our companies where the timing made sense and there was other right conditions to give them capital and longevity through this period. Second is providing our founders with clarity in time of uncertainty. Us as investors, we see a lot of things from multiple business models, multiple geographies, that sometimes can be really valuable in this time of great uncertainty for founders and CEOs that are maybe focused on just one industry. So it can really help them make key decisions. Number 3 and 4 are things that we would be doing normally anyway as investors, but I think now more than ever, it really makes sense to do. So rolling up our sleeves and helping our founders where we can, from everything from helping them close deals, to helping them raise capital with other investors, to even helping them with cost-cutting exercise when they have had to go through that. Which also relates to number 4, which is, being an empathetic ear, being a support system for our founders, because it's always hard being a founder, but now more than ever, it's quite a difficult period. So being there and helping them and being a sounding board, I think is really valuable. And then finally, what we've also done is actually run some special sessions for our founders. So think from a monthly call for founders to share kind of the experiences they're going through in these times, to bring in outside speakers to talk about, what previous crashes in 2008 were like and how people weather those storms. Speakers on, managing energy and mental health. And also like helping our companies negotiate group discounts at a portfolio level to help them reduce cost where it makes sense. So we are still looking for new opportunities, but I would say the bar is pretty high because most of our focus is going on current portfolio. We've made a partnership with our founders, and this is the time where we really want to kind of support them as much as we can. So this would be probably similar to most venture fund firms in the market, where there is still, we are also looking for deals, but a lot of energy is going in supporting current companies. So what does the world look like post-COVID? I don't know. I don't think anybody does. I think it's an impossible task. And there's this kind of a once in a lifetime experience we're all kind of going through. But having said that, there are some themes that are starting to emerge that we're seeing that probably will endure through this time. So on the consumer side, we're seeing an increased digitization, right? So people are forced to work from home from their laptops. So they are getting used to doing more stuff online than they were ever before. There's been an increase in e-commerce, right? So people have more time and some disposable income that they're not spending, in restaurants and bars, etc. That is going on online purchases. So Afterpay and Zip, for example, and FinTech are seeing an expansion as a result of this. Third, I think there will be an increased focus on financial fitness. So it's probably something that hasn't been very, interesting for a lot of people. But I think coming out of this crisis, there'll be a whole generation that'll remember this the same way the previous generation remembered, the .com or the '08 crisis. And I think fitness will be something that'll come into focus. And finally, a thing that, I think could happen for consumers is a flight to safety, right? Like if things really do get pretty dire, I think it's interesting in human behavior where we all go to what we know and where we feel secure. So I think that'll be an interesting trade-off for the impact that'll have for incumbents versus startups. And on the enterprise side, we're seeing an increase in efficiency and process automation. Large companies are finding that this is a catalyst for them to actually reduce costs where it makes sense, but also that they weren't very nimble when this crisis hit. So they're looking for ways to address both those issues. The other thing also happening for them is that they're going to be focused more around their core, right? Increasingly, I think in the last few years when times were good, companies were actually expanding the horizon, doing new things because they had a license and ability to do that. I think increasingly people will do really what, the core of the business was. I mean, we saw an announcement of Airbnb recently around what they're cutting back and going to the core as well. And I think a lot of companies will do that. So what that means for founders and companies is that if you're not selling it at the core, then there is a risk there to think about. And finally, I think there'll be a renewed kind of focus in FinTech around compliance and security because these things never go away. And having company in this space will still, I think, will kind of weather the storm probably better than other sectors. So an example of company that, I think is kind of in our portfolio, kind of using COVID as a tailwind, because I think there's certain companies that are, affected negatively, some were neutral, and some that this has actually been an actual tailwind for them is, for example, Indebted in our portfolio, where what they're doing is they're actually transforming the exciting world of debt collection, which I know probably gets everyone's hearts racing, but it's an industry that's had a lot of challenges in the past with bad actors, with regulatory hurdles. And what Indebted is doing is really coming at it from a very different angle. They are attacking that industry across 3 vectors. Firstly, they're looking at, they've built a platform that is very, very powerful in terms of the efficiency they can drive in how they collect from people. And also they can contact people on channels that they actually want to be contacted on through SMS, WhatsApp, these kind of things, rather than a harassing phone call at 10 a.m. in the morning when someone's at work. Second is the data that they collect, right? So they can based on if somebody is a 20-year-old surfer, with an overdue afterpay account versus a 50-year-old with an overdue mortgage account, that communication, it looks and feels very different on who they're talking to. And finally, they're actually incentivizing their staff and agents not on what they collect, but actually the user experience and feedback. So they now have more than 400 five-star reviews on Google from people they've collected money from, because they're taking this very human approach to this collection, because what they recognize is a lot of people in these times in lives, they just fallen on a difficult time and need some assistance and help to get through it. And that's what companies want as well. That's what large telcos and banks want as well. They want people to get back on their feet. So this is a company in the current environment that is getting a lot of, the right dynamics to help them grow, because more people are in a difficult space, but also that people deserve to get out of this space and they need the right kind of support to do that. So I guess, what do we normally look for in a startup when we look at deals? So I think, I talked about focus on FinTech and adjacencies. I talked about the fact that we look for seed to Series C deals, and I've talked about the geographic focus that's primarily in Australia and New Zealand, but increasingly in Southeast Asia and India as well. But beyond that, we look at, from a business perspective, the business dynamics. So we look at how large can the company get, why is now the right time? I think that's a very critical question, because you can have a great idea and a great team, but sometimes timing can be off. Is it a crowded space? Is it disruptive, sustaining? And, what are the moats for this business for long-term success? And then we look at the metrics, how quickly is the company growing? What's the revenue? What is its lifetime value and unit economics? Things like that. And finally, the deal terms, right? Like, does it make sense for us as an investor to participate in this company at the right holding and valuation? But that's on the business side. On the founder side as well, which is incredibly important, it's probably the most important thing. We'll look for founders that are ambitious, because we want to back big businesses, and the venture capital model is built to back big businesses. That's the truth. We look for people that have a lot of hustle, that want to get stuff done. We look for a spike in the team. And what I mean by that is, like, what is it in this team that is truly unique or different from everybody else, right? Like, why they're better than somebody else going after this space. So that could be a founder that's incredible at pitching, could be a founder that's incredible at product, or somebody that has really keen strategic insight into the domain and that allows them a wedge into execution, right? We look for founders that have a healthy co-founder dynamic, because that's really important for a longevity of a co-founding dynamic team and the team going forward. And finally, we look for alignment of values, right? Like, this is a long relationship, and I think we all should be spending our time with people that want to build a world similar to what we want to build. And finally, as a bonus, if someone's a repeat founder or a team is a repeat founder, that's really compelling as well, because they've gone through that journey before. So look, that's probably all the time I have. And if you want to get in touch, reach out to our info account or to me personally on Twitter. So yeah, thank you very much. Cheers.